Hello. Since early in 2023, has your portfolio gone up 100%? Well, mine has. Let's go take a look.
Okay, let's get started. Here I am on my website, SwingTrader.Trading. We're going to take a look at what's up 100% in my portfolio. On the home page here, we're going to click on this icon to take us to the Google Docs. And here you can see lots of data on this Google Docs page. I call it the scorecard. I have all 6 model portfolios, bar charts here of how they're doing. You can see that they're doing pretty well in general. The number one is the one I'm going to show you, which is Quant Alphas, which is up 100% since it began, which was in April of 2023. And I'm going to describe this model portfolio in more detail later. And in fact, I'm going to go into all the model portfolios and describe them later also. But just to show you how we come up with that number is here Quant Alphas in this spreadsheet has a number, as do all of the other model portfolios. And this is derived from Google Sheets. They update the numbers probably every 5 minutes. And I think that the stock prices are delayed by 15 minutes, but I'm not sure. And this is a spreadsheet style representation of the performance of the portfolio. And as you can see down here, this particular portfolio started in April of 2023. All the rest of them started at the beginning of 2023. So if we go over here, you can see I've got it, the performance shown from the beginning of 2023 for all the portfolios. And you can see a trend, most of them, and the trend is up. And you can see the benchmarks that they're compared to. Basically, I don't believe that it's fair to compare my portfolios to the S&P 500, since my portfolios are all equal weight and they're all stocks that are not in the Magnificent Seven. So comparing it to how the Magnificent Seven is doing is just not proper. Eventually, the Magnificent Seven will come back to earth, and these other smaller stocks like small caps, mid caps, and equal weight large caps are going to have their day. But in the meantime, my portfolio is chugging along and doing pretty well, all 6 of them. The only one that's lagging a little bit is the mid cap flyers here. You can see it's pretty close to its benchmark. Sometimes it's ahead, like over here, and sometimes it's not. All the rest of them are pretty comfortably ahead.
My website is purely driven by automated software. I have 6 model portfolios. I'm going to describe them in the next segment in some detail and take a look at how they're performing. And basically, the software driven, all 6 of them. One of them is a quant portfolio, which is driven by quant ratings on a website that I pay for. And the other 5 are driven by software which I have purchased. My website is driven by mechanical investing. Basically, I take the emotion out of it. Whatever the software says to do, I do. And if the software says to add something to the portfolio, I do that. And if the software says to remove something from the portfolio, and I do that. My track record, I'd have to say, is pretty terrific since last year. Of the 5 model portfolios, only one of them is even with its benchmark. The other 5 are besting their benchmark. The best one, the Quant Alphas, is up by 100%. So I'm going to show you more information about the website following this.
Here we are on my website. It's April 10th, 2024. This is the home page. What we have here, this big diagram here, it takes you right to the scorecard. That's what you want to see. I already showed you earlier the scorecard. Also on the home page, you have backtest results of 5 of the model portfolios. You can see that the results are fairly good. And it's the LC Stalwarts, which has the less impressive chart. And on down through here, some recent blog posts and all this usual stuff at the bottom. Won't go into that now. Going over to the model portfolios, I have 6 of them. They're listed here. Small cap discoveries, mid cap flyers, and so forth. So we'll pick on one, my best one, the Quant Alphas, and they're all set up the same here on the page. I have a little bar chart that shows you the latest performance, a description of the model portfolio and the criteria that's used. And this particular one, I don't have software that selects this. This comes from a website that I have a paid service to, which has quant ratings about the stocks. I use the quant ratings to select the stock. And I do that twice a month. Down here, you have a few links that are interesting. This right here will take you right to the Google Docs that has the portfolio information up to date. You can see there's active positions and closed positions. And over on the left side, some calculations, and it comes up with the number and shows you the bar chart. In part 2 video, I'm going to go into way more detail on these portfolios. But for now, I just want to show you where they're located and go to the blog. I have a blog and it has over 100 entries in it. Basically, every time I update one of the portfolios, I create a blog entry which has the date and tells you how much it's up, if it's like impressive. Tells you a little bit about what's been done with the portfolio, this update. And this one tells you information about the criteria. And this last one, we added Cardinal Health and removed Marathon Petroleum. A little bit of information about what's going on. Especially like to talk about the standout performers in the portfolio. I rarely talk about the ones that didn't do so well. Nobody's interested in that, but it's in the Google Docs. You can see it for yourself. And then I always have a summary of how, at the time that I created the blog post, how all the model portfolios are doing. And a link to the back test here, and then a little summary at the end. That's pretty typical. I have a page about me, so I want to spend a little time on that, because in part 2, the part 2 video, I won't talk about this one that much. I'm only going to focus on the model portfolios. Basically, I've been in the stock market a long time as an individual investor. I don't have any certificates. I didn't go to business school, none of that. All self-taught, school of hard knocks, if you will. Has the information in here. I started in 1978, bought my first stock. I believe it was Northern Indiana Public Service. I've bought options. I've been in futures a little bit, in margin, got hurt in margin. I've done it all, and I've had good years and bad years. But after a while, I kind of found my niche, and I found that it's swing trading. I do much better with swing trading if I'm going to buy individual stocks than any other one. And that's why I started this website. I feel like I have something I can offer on swing trading that may not be out there. And I've learned so much over the years, and I relied on other people's advice and read their books, got their knowledge. And now that I'm retired and well past halfway towards the end, I feel like I want to give something back. That's a lot of people feel this way when they get to my age. They had a good life, they were successful, You have younger generations coming up that haven't gone through what you've gone through. And before you go, you like to leave the world a little bit better off than when you came in. So on the investment side, this is my effort. And hopefully, if you're reading this or listening to this, you'll find that there's some value in this website and also the videos, and you'll, at least on the video side, you'll subscribe. I'm asking you to subscribe, and also click the notification and like it if you like it. But so this is my effort to give back, and I have a little bit of description in here. I just want to mention that the portfolios are theoretical only. They're not real portfolios. I don't have money invested in these portfolios like they're showing their positions, transactions. But I will also say that I use these same criteria for my own portfolios, but I don't have the exact same stocks, but I have some of them that are shown on the website. And also, I don't trade buy and sell in my own personal portfolio, or add and remove as referred to on the website on the same day that the portfolio changes are issued on the website. So it's a different day. Shouldn't be any conflict there. So my criteria applied to the portfolios is basically I have some exclusions. I won't get any stocks that I know are from China, Hong Kong, Vietnam, Taiwan, and Russia. I try to exclude them up front in the software. And I've had very bad experience with stocks in the airline industry. I won't get them. And don't get me started on the crypto stocks. I won't be getting them either. And sometimes the software will issue an ad to a company that has a buyout and has agreed to a buyout. And if I find out that's the case, I exclude them because basically it's an arbitrage situation, and we don't want to get into that. We want stocks that have unlimited upside. So I check that and I exclude them if I find it. And also I spend a lot of time making sure that the stocks that are listed as an ad are liquid enough to use market orders at the open or close. And if I determine, or I think that they don't meet that criteria, I exclude them. So I have a way to exclude tickers that the software won't even look at. And that's what I do. So I have 4 monthly model portfolios and a bi-weekly portfolio. And they basically reflect fundamental data. And then as the earnings season progresses, as it says here, you can expect that the picks is going to change from update to update, especially during the peak time of the earnings season. And the main criteria that's used is earnings per share, relative strength, price sales, change in sales, price book, and return on equity. This portfolio each portfolio of the 5 that I mentioned is generated by a screener that I customized to give the picks. And each screener has its selections back tested over time to verify it's providing alpha. I've checked the audit trail on the back testing, verified it's accurate, and I don't believe there's any survivorship bias in it. But as far as I know, I could be wrong, but I want to avoid that, and I think I have. Now, how the portfolios work, briefly, is that they each start with a fixed equal starting value. There's no compounding. So basically, if you had a portfolio with 20 stocks in it, if you're trying to calculate how it's doing, being that they all start at the same equal value, you could just assume like $1,000. So you would assume for calculation purposes that you had $20,000 invested in that portfolio. And what it does, the calculations, is it keeps track of the ones that are active, keeps track of the ones that are closed, adds them together, does an average over time of how many transactions you would have had in the portfolio, and comes up with a number, a divisor, to calculate your performance. And that's what you're going to see on the Google Docs. And on the part 2, I'm going to go in a lot more detail on that. So please go over to part 2 if you want to know more. Dividends are not counted for the monthly model portfolios or the bi-week swings portfolio, because I decided it was just too much trouble. There's a lot of turnover, and it would make the spreadsheet look real messy, hard to follow, and I'm trying to keep it simple. And basically, I found that over time, some of the selections that you would add will pay a dividend, and some won't. And of course, the index is benchmarked to does pay a dividend. But these stocks in the portfolio are in the same general type of stocks that are in the benchmark, and over time, the dividends pretty much cancel each other out if you was to count them. So I don't count them, and that's just the way it is. Now, in the Alpha Quant's model portfolio, since it's a much longer term hold, which those are, you add them twice a month, but you only remove them when the software says to remove them. It could be a couple years. They're not so much short term. Some people would say it's probably not swing trading. I would probably agree with that. It's more of a longer term hold. But the portfolio performance is so good, I thought I had to add it, even though it's maybe not technically a swing trade type of portfolio. And as long as you understand the differences, I think it's okay if you take a look at it. But if you're going to use any information in that portfolio, understand that those are intended to be longer term. Now, they all have back tests, the 5 model portfolios. The Quant Alpha's doesn't, because if you look at the model portfolio description, it tells you why it doesn't have a back test. I don't use any stop loss. I don't use stop gain. I don't use any timing. I don't use any technical analysis. I don't believe in any of those things, and I don't use them. And my performance on the website would indicate that I don't need them. Basically, if you only had a couple stocks and you had all your money invested in them, a stop loss makes sense because you don't want to get wiped out because the stock took a nosedive. But in my case, everything is equal weighted when you start, and it has plenty of transactions, basically a diversification. So if you have 20 transactions that are active and one of them takes a nosedive, well, you have 19 others that didn't take a nosedive, and they kind of offset the outlier. And on the other side, if you have one that skyrockets, of course, it's only 1 out of 20. It brings the performance up a bit, but my philosophy is, as long as the software says, "Oh, we want to keep that one," I'm going to keep it. I don't care how much it went up. I'm going to let my winners run. And if the software says, "Oh, we got to get rid of that one," and it's down 50%, it's going to go. You got to remove that one. If you're going to be successful in swing trading or any kind of trading, you have to be able and willing to sell your losers when it's time, and not think about, "Oh, I can't sell my loser because I have to wait for it to come back to what I paid for it." No, that is a surefire recipe for underperformance. And on the other side, you don't want to sell your winners just because they're up, because "Oh, it's up 20%. It may go back down. I better lock that in." You can't go broke by taking gains. No, your biggest gains come from your winners. If you let them win, they're liable to keep going up, and you're going to have a huge profit, like SMCI, which I showed you in the Quant Alpha. and only sell your winners if you have a really good reason to sell them and not because they're up a lot. That's no reason at all. But if something about the company changes or you need the money for life, yeah, okay. Take some profit, sell it off, but only then. Because if you hold on to your losers and cut your winners short, you're going to underperform. I guarantee you. All right, that's my speech for now. Let's move on. That's the criteria. There's also a drop down subscribe and contact. The subscribe is free. If you subscribe, basically I have your email address, and then every time that I issue a new post, which will be updates to the model portfolios and a monthly update also, you'll get it right away. You won't have to wait for the video. I highly recommend it. If you like this information and want to check it out, also you can contact me, send me a message if you want. There's a usual other drop down, got other stuff in there. There's also a disclaimer. Disclaimer is important, and I just want to emphasize that this website is for informational purposes only. Do not take anything that I say in here as a recommendation to buy or sell anything. All my portfolios are modern portfolios. I don't have an account somewhere that's got exactly those stocks in it, bought at those prices on those days. And anything you see in there, if you think it's interesting, you should always do your due diligence and decide for yourself what you want to do. Hopefully, the main point I'm trying to get across is that swing trading can be profitable and it can be fun. You don't have to sit in front of the computer all the time watching the squigglies on the screen. You just have to come up with a good strategy that you back tested, you convince works, give it time to work, follow your strategy, buy and sell. Exactly. And because the stock market tends to go up over time, eventually you're going to do pretty well. That's it for now.
Now that you've seen the website, I just want to wrap it up and tell you that this is a part one of a two-part video. I know it's a little bit long. Hopefully you stayed through it and got to the end. There is a part two. I think it's going to be longer. I've already recorded most of it. And in part two, we're going to go into great detail on each portfolio and describe them and show you where they're at. Also in part two, we're going to take one of the Google Docs portfolio tabs. I'm going to go through it and tell you exactly how I get my numbers. I'm a long-term investor, started in 1978, self-taught, no certificate, no business school, school of hard knocks. I've basically tried it all. Day trading, swing trading, buy and hold, futures, options, margin, and I've come to realize that swing trading is where I'm most comfortable, where I know the most about. And the reason I'm doing this, you may wonder, why is he have a free website? Well, I have a free website because now that I'm retired and I know I'm well past midway to the end of the road, I feel I need to give back some of what I've learned. And a lot of people, when they're my age, they kind of feel the same way. My website is my way of doing this in the investment side. Other people do it in other ways. But you like to leave a little bit of a legacy, something people will remember you for. And that's what I'm doing. This is my first video. And hopefully I'll do more. But if it turns out I don't have much success with the videos and I'm not getting much subscribers, not much likes, not much notification bells, I'm probably going to stop doing it because it's a lot of work, as you YouTubers out there know, to create each video. It's much easier for me to just maintain the website. It's not a whole lot of work for that once you get it set up, but the videos are work. So if you like what you're seeing, please subscribe and please click the notification, and if you like it, put a like on it. Thank you.
All content on this site is for informational purposes only and does not constitute financial advice. Consult relevant financial professionals in your country of residence to get professional advice before you make any trading or investing decisions. I have a disclaimer on my website, SwingTrader.Trading. Please review it if you're going to go on the website.